So this is my actual investing account. Real money, real results. 2 years of investing $5 every single day into VTI, the total US stock market ETF. Right now, this account shows just over 13 shares worth almost $4,400. And I want you to sit with that for a second because this account was not built with a lump sum. It wasn't timed perfectly and it definitely wasn't built with extra money. It was built with $5 at a time, one day, then the next, then the next. In this video, I'm going to walk you through exactly how much I put in, how much this account grew, where those gains actually came from, and why this simple experiment completely changed how I think about starting small with investing. I'll show you the dividend payments most people never talk about with VTI, and I'll explain why the biggest barrier to investing success has nothing to do with money and everything to do with motion. But first, I want to explain why I even did this in the first place. Most people don't fail at investing because they pick bad ETFs. They don't fail because they lack intelligence or because they're bad with money. They fail because they think they need more money, more confidence, more knowledge, more certainty. They think they need the perfect time to start. So they wait, they watch, they plan, and they never actually begin. I wanted to prove something very simple. You don't need motivation. You need momentum. And momentum doesn't start big. It starts small. $5 a day felt almost too easy to ignore. No lifestyle change, no budgeting, no stress, no pressure to get it perfect. And that's exactly why it works. Here's the uncomfortable truth. Nobody feels rich investing $5. That's the trap most people fall into. They think investing should feel significant, that it should feel like a sacrifice, like they're doing something important, but $5 doesn't hurt. You barely notice it at all. And because you don't notice it, you don't quit. And not quitting, that's where investing actually starts to work. This experiment was never about beating the market. It was never about proving VTI is better than some other ETF. It was about building the habit. Because once you become someone who invests every day, someone who shows up regardless of what the market did yesterday or what the headlines say today, everything gets easier. The amount gets easier to increase. The patience get easier to maintain. And the long-term thinking becomes natural instead of forced. Let's slow this down and do the math for a moment because this is where it gets real. I started this on January 1st, 2024, 2 years ago exactly. And I'll be honest, when it started, I had no idea if I'd actually make it this long, but I did. $5 a day multiplied by 731 days comes out to $3,655 of my own money. That's it. No lump sum from bonus checks, no tax refund, no inheritance, just consistency, just showing up. And remember, this account is currently worth $4,378.28. So right there, we're looking at $723.28 in total gains, almost a 20% return over 2 years. Now, is that good? Is that bad? Here's what matters. It's real. It happened. And I didn't have to time anything, pick any individual stocks, or stress about market corrections or timing. Here's something important to understand. If I had quit after 3 months, I would have barely seen any progress. After 6 months, the account still wouldn't look impressive. You have to stay long enough for time to do its job. Most people quit too early, right before it starts working. Now, let me be very clear about what VTI actually is because I think a lot of people hear total stock market ETF, they don't really understand what that means in practice. VTI isn't a stock. It's not a bet on one company or one sector. It's the entire US stock market. Big companies, small companies, old companies, new companies, growth companies, value companies, all of it. Over 3,500 different holdings in a single fund, and it's market cap weighted, which means the most valuable companies make up the largest portion of the fund. So right now, it's companies like Apple, Microsoft, Nvidia, Amazon. They carry the most weight. And that's not a flaw in design. That's exactly how it's supposed to work. When people say the market has been on a tech-fueled run over the past couple of years, they're absolutely right. And because VTI is market cap weighted, it participated fully in that growth. But here's what people miss. When the next wave comes, whether it's energy or healthcare, financials, consumer goods, whatever, VTI will participate in that too. It doesn't guess winners, it absorbs them. You're not betting on your ability to predict the future, you're betting on American businesses collectively continuing to create value over time. That's a very different kind of confidence. Most of the growth in this account came from price appreciation. The market had a strong run over these 2 years, and because VTI owns everything, it participated fully in that upward movement. But here's what I want you to understand. I didn't buy at the perfect time. I bought every single day, which means I bought when the market was up, when it was down, when it was flat, when everyone was panicking, and when everyone was euphoric. I removed timing from the equation entirely. Now, here's something people almost never talk about when it comes to VTI. It pays dividends, not flashy ones, not high yield income focused ones like you'd see with something like SCHD or JEPI, but real, growing, consistent cash flow. Over these 2 years, I received 8 dividend payments totaling just under $56. And here's what's interesting. Each payment got slightly larger as my share count grew. Now I know what you're thinking. $56 in 2 years doesn't sound like much. And you're right, it's not life-changing money, but it did something psychologically important I wasn't expecting. It made the account feel alive. Every quarter money showed up, not because I did anything, not because I sold something or timed something or got lucky, just because I own shares of businesses that generate profit and share some of that profit with shareholders. Money creating money without me touching it. And that changes how you think, because once you see dividends hit your account, even small ones, you start to understand that investing isn't just about selling later for more than you paid. It's about building an asset that works, and the longer you hold it, the more it works. Those $56 automatically reinvested into more shares. Those shares will generate their own dividends, and so on. That's not theory. That's what actually happened in this account. This experiment proved a few things very clearly. First, you don't need a lot of money to start investing. You need consistency. $5 a day is less than most people spend on coffee, subscriptions they forget about, or convenience purchases they don't even remember. It's not about the amount, it's about the rhythm. Second, you don't need perfect timing. You need time in the market. I didn't wait for a crash. I didn't try to buy the dip. I just started. And over 731 days, those imperfect purchases averaged out into real growth. Third, and most importantly, if you wait until investing feels comfortable, you'll wait forever. It will never feel like the right time. There will always be a reason to wait. A bill coming up, uncertainty in the market, something you want to buy, a vacation you're planning. But comfort is the enemy of momentum, and momentum is what builds wealth. This account is just getting started. 13 shares doesn't sound like much. $4,400 doesn't sound like much. But in 5 years, 10 years, 20 years, $5 a day doesn't stay small. What looks small today only looks small because time hasn't done its job yet. The math is simple, but the compounding is wild. If this account continues at even a modest average return, those daily $5 purchases turn into something that actually matters. Not because any single day was special, but because all of them added up. And in my next video, I'm going to show you what happens when you take this exact same habit, $5 a day, every single day, and aim it at income instead of growth using SCHD, because growth builds the engine and income eventually pays the bills. And be honest with yourself for just a second. If you had started this 2 years ago, where would you be right now? If this video helped you realize that you can start not someday, not when you have more money saved up, not when you feel ready, but right now, today, with whatever you have, then it did exactly what it's supposed to do, because the market doesn't care if you start with $5 or $5,000. It only cares that you started. If you're not sure what to watch next, check out another one of my videos right here. Take care, and I will see you next time.